right, here we are with Tatiana for our first mortgage minute of the year, and excited to hear what's going on with the mortgage rates and see what they're going to do in 2024, because I know you have that crystal ball. So what's going on?
Yes, and it's a good omen with the whole nice hat. I think that we have good, nice, wonderful things to hear from our favorite mortgage lender.
Yeah, I also have one that says naughty. So when rates will go up, I'm gonna wear that one.
Oh, nice. Okay, throughout the year. That's perfect. Hopefully we won't see the naughty hat at all this year.
No naughty.
All right, I got
Hi guys, Happy New Year, everyone.
Happy New Year.
So I want to start with actually overview of last year, kind of first.
Okay.
Interest rates doubled from 2022. January, February, they went to 6.5% when they were in force in 2022. And from March to October, we had strong economic data casting double of that of inflation, and Federal Reserve raised the benchmark interest rates another 25 basis points for, from March to October. They kept on doing it, increasing the interest rate. And then at the end of the year, November, December, actually rates start going down. Federal Reserve said that they suggested inflation might be coming into the control after all. So we had pretty good end of the year. And if we can compare 2021, 22, 23, these numbers, letters here, those represent the months, right? So we can see how rates were going in 21, 22, and 23 right here. They dropped from 8% or 8.5% even to about 7, 6.625, 6.875. So it's a pretty good drop that we had. Prediction for 2024 rates might get down to even below 6%. Okay. When it will happen exactly, nobody knows. They can just predict, but those are the prognosis for the new year.
Can I ask you real quick? So this is what I've been hearing too, is us getting close to that 6% mark, either low sixes or maybe really high fives. Mm-hmm. But over the last week, I've heard a couple people, kind of outliers, saying that they may end up getting into the fours. Have you heard anything about that, or think that could be at all possible?
That's what I heard as well.
Okay.
Is it gonna happen really? We'll see. We'll see what happens. But I try to be more conservative and say it's gonna be below 6. And if it's gonna be in 4, I'll say, well, see, it is below 6. So
yeah,
right.
You're right either way. Yeah. Hedging your bets. I love
it. So what happened the week after the new year? Actually, rates increased slightly. So we have 6.68%. I guess I had to wear naughty hat, but
yeah,
the rates are still good. Looking ahead, experts forecast the rates will decrease again in 2024. And inflation has come down, so the mortgage rates, of course, and we might get so they indicate the Federal Reserve indicates that they might start cutting down the federal funds rate as well. Okay. So that's good news for those who has home equity lines of credit, because prime rate that Federal Reserve controls actually affects the HELOCs, home equity lines rates.
Okay.
It has indirect effect on mortgage rates, or first mortgage rates, of course, because when they make comments saying that inflation is going down, that means that interest rates are going to go down as well, following their commentary.
Yeah. Okay. I love it.
Yeah, so that's it. We're still in 6.683 on FHA, 6.5. In some cases, again, those are average rates.
Yeah,
It could be a little bit low for some, it could be a little bit higher for others.
okay,
But average is, what the chart is showing right
Yeah.
now.
okay. So
Good.
overall, we're going in the right direction.
Yeah,
though.
that's good
So,
news.
Good.
Yeah.
Well, and we felt that already
Yeah.
with people. I know we're showing a whole lot more and, well, and we were in contact with you just yesterday. Are you getting a whole lot more mortgage applications here in the last week or so?
People are, starting to apply again. The
Yeah.
end of the year was a little bit slow. I think everybody just took their time to pause and celebrate and
Yeah,
Yeah.
but now they're regrouping and coming back strong. The 1.5% or more drop in interest rate actually freed up some buying power for people,
Yeah.
and monthly payments went down in average over $300 a month,
Wow.
$350, $370. So that's a good news. What it tells us that more people are gonna again get back to the market. We might get multiple offers again. So I think since it's still January, since it's still new right before holidays, it is a good time to start getting back into the shopping, house shopping mode.
Yeah.
Yeah, but before the pendulum swings in the spring back to losing contingencies and losing all the offers and all of that. Now is beautiful.
Yeah, we just talked about a property, the one that we had called you about, that had been on the market 136 days, and right after the new year, he had 3 agents calling him wanting to write offers, and they ratified. So even properties that have been sitting for a long time are starting to go. So that pendulum is starting to shift or swing pretty quick.
Yep.
Yeah. Okay. Any questions about interest rates or?
No, I'm happy. I'm
Good.
I'm happy. This is such a beautiful note to
Yeah.
start the new year off with.
Okay, so now the next question that we were going to talk about is we want to talk about mortgage insurance.
Yes.
I know you've got a PowerPoint because you are fantastic at doing that. So can you go through mortgage insurance, explain it to us, explain what the options are with that and how that works?
Well, and because a lot of people get confused, with all the terms and with the applications, they're like mortgage insurance and then homeowners insurance, and it's like, what is all this? And so let's just
Dive in there.
let's do it.
Yep. And then one other caveat. A lot of people will spend a year or two building up to get to their 20% down because they're so afraid of that mortgage insurance amount, and it ends up costing them a lot more in appreciation and money being held. So sometimes that's not the best strategy. So hopefully we can just talk about that a little bit as well.
You read my mind, Sean, because that's exactly what I'm going to be talking. Exactly. Okay, so mortgage insurance versus homeowners insurance. Let's just start talking about it. Homeowners insurance is just insurance like you have a car insurance, right? You need to protect your house in case of fire or some other disaster. Mortgage insurance is insurance that protects lender in case the buyer is in default. And when buyers stop making payments, house goes back to the mortgage to the bank, and it's very costly, so they want to be protected. And when you put less than 20% down, there is a mortgage insurance that is mandatory. On conventional loans, it can be removed once there is 20% equity in the property.
Okay.
Or it comes off automatically once there's 22% equity in the house.
Okay.
So yeah, the MI, short for mortgage insurance. And just exactly like you said, people want to save up money to avoid that mortgage insurance, and then they miss out. So let's take a look. I ran some numbers. So again, hypothetical scenario, we have price of 500,000 and somebody's putting 10% down, so they have 50 grand, they're gonna put it down. I ran scenario for 740 credit score. The mortgage insurance on conventional loans works also kind of like a car insurance. When you get car insurance premium, they look at your driving record. The same is here with mortgage insurance, better credit score, lower premium.
Okay.
Okay.
and better driving record, lower premium on the car insurance, right? So depending on the credit score, depending on the down payment, and depending on actually how many people are gonna be on the mortgage, the mortgage insurance payment could be different. So this is the scenario: 10% down, 740 score.
Okay.
1 year to save up. Okay, so that's a little bit backwards, but okay. So am I one person on a mortgage? Monthly payment is $90 per month,
Okay.
or $1,080 a year for the
Okay.
mortgage. If there are two people, it's a little bit cheaper, $71.25 per month, or $855 a year.
Okay.
So somebody says, okay, well, I don't want to pay this. I'm gonna save up additional $50,000 to actually get to 20%, right? So how long is it gonna take for someone to save up 50,000? Let's
Probably,
say,
yeah, if
Yeah.
they're fortunate and they can put that much money away, but
Yeah.
for some people, I mean, for a lot of people, that would take a couple years, but a year is a good starting.
yeah, so let's say just a year. If probably you're right, couple of years, but let's say it's even 1 year to be very optimistic.
Yeah.
Right.
They're gonna miss out. They don't want to pay $1,000 a year. They're gonna wait to save up 50,000, and they're gonna miss out on appreciation of about 35,000. So let's say if appreciation is 7%. So
Yeah.
in 1 year, the same house is gonna cost 535,000. They
Yeah.
actually need to save up more than 50,000 at this point, right? Because 535 is gonna be the price. So
Like
20%
57,000
down
now
is
they
gonna
have
be
to save
more
up.
money. Yeah.
Yeah.
And let's say this is 10% down. Somebody has only 5%. The monthly MI is gonna be higher. So let's look at that scenario with 5% down. So the loan amount 475, probably gonna take them about 2 years, let's say, save
Yeah.
up
Yeah.
75 plus. The mortgage insurance for one person is $142, which is $3,400 a year, or $110 for two people, and it's $2,700. Actually, not for a year, for 2 years, because we're waiting, right, for 2 years to save up the $75,000.
Right.
We have missed appreciation of about 70,000,
Wow.
Yeah.
if not more than that. So you don't want to pay $3,500 in mortgage insurance, but you're gonna miss out on at least $70,000 in
Yeah.
appreciation.
That's like you come into me and saying, hey, I tell you what, I'll make you a deal. So you ask me, you say, give me a check for $70,000. So I give you the check for $70,000, and then you give me a check for $3,420. It's like,
Exactly.
is that a good deal? It's
Yeah,
like, no,
not a
I'm
good
not doing
trade.
that. That's not a good trade at all.
Exactly.
Yeah.
And in some cases, mortgage insurance is tax deductible too. That's another thing to keep in mind.
Okay.
You need to talk to tax advisor, of course, to make sure that in your particular case, it is
Yeah.
tax deductible. But if it is, you're gonna basically pay even less than
Yeah.
142 a month.
Yeah, that's great.
Yeah. Yeah, I think that's a really, really good example. And that's where emotion versus logic plays in. It's like, and that's the beauty about real estate, is
Right.
everything can be based on numbers and logic. So I think this is a great explanation.
I think it is too. And to hit the point again that, all you need, let's say they only put the 10% down, and all they need is the time it takes to build the equity and another 10% while they're in the home. And then they can get the BPO or an appraisal and get that removed. So it's removable, it's a temporary thing. So it just really makes no sense to not get into a house now, just because of mortgage insurance.
Yep.
Exactly. And if rates will go down later, they're gonna refinance anyways, and they reach 20% equity at that point.
Yeah. And most people are going to sell a house within 5 to 7 years. So they're only, at max, they're gonna pay, you know, if they follow the average, they're gonna pay 7 years worth of that mortgage insurance. And I mean,
Yeah.
I think the numbers make total sense to not worry about that mortgage insurance.
I
Yeah.
agree.
I didn't realize though that it was different with more
didn't
people
either.
on the mortgage. So
Yeah.
that was cool to know. I didn't know that.
Mhm.
Yeah.
Okay.
It makes-
Yeah, I guess they think that when there are two people, less chance that they're gonna foreclose.
Yeah.
Oh, yeah,
Yeah.
yeah. Well,
that makes
and I think that, as we say pretty much on every, what's my phone ring next?
Nothing happened.
As we say on pretty much every mortgage minute, the best thing to do is talk to the lender. So they need to talk to you, let you run the numbers and give them the scenario so that they can figure out what their best option is.
Absolutely.
Yeah.
That's true.
Okay. All right. Well, thank you. We really
Yeah.
appreciate it. How can people reach you?
They can call me at any time, 571-245-3000.
Okay.
That's
All
right.
right. Well, thank you. We will see you on next
Thank
week's
you.
Mortgage Minute, and everybody have a great week.
Yep. Bye.
Have a great week. Bye.